Tom Albanese, CEO of Vedanta Resources and Sesa Sterlite, joins us on the show. Really good having you, Tom. Thanks so much for joining in. It's been a happy start to the new year for you. Share with us your views on the mining ordinance passed by the cabinet yesterday.
Yeah, thank you. It is a great start to the new year. We've been supporting these amendments. I think that what we've seen, certainly I think the global mining industry seen as that India has been stuck in a huge logjam over the past several years because of uncertainty over policy and quite a wide range of controversies about the historic allocation of processes. And for me, the auction process is a practical and sensible way to break that logjam and get mining back into business in India.
Tom, hi, morning. For Vedanta in specific, are you optimistic now that bauxite mines will be allocated to the company for the Odisha aluminum project?
I think, again, the purpose of the auction process is to ensure that the people that are interested in pursuing development have the opportunity to look at these, look at the leases wherever they might be, and again creates transparency and some competition. So my hope is that this becomes an enabler to us having the needed bauxite in Orissa and other parts of eastern India so that we can actually source the billions of dollars of investments in aluminum that we've made in eastern India for the production of aluminum for India.
I don't know if it's unfounded or no, but there is some criticism coming in from various industry bodies talking about cartelization, unfair practices in relation to the auctions. Are these valid concerns or you would dismiss them?
Well, I think first of all, let's put this into perspective. India is hugely rich in iron ore resources. And right now, India is importing iron ore for its steel sector. And the steel sector hasn't even begun to grow yet. So the policy paralysis that has held back iron ore mining in India is actually good for the Brazilian, good for the Australian economies. It's not good for the Indian economy. So I think what I'd like to see is an opening up of the iron ore sector, a recognition that India is not scarce in iron ore. India is scarce in the capital, the money to invest in its iron ore. So money needs to be attracted to India, both by domestic Indian companies and by international companies to drill more, to explore more, to find more of the resource. We know the geologic structures are here. I've seen them for myself. It's about now turning those geologic concepts into definable, reportable reserves so that mine plans can be made and that India's future steel sector, the steel sector that should be producing 250 million tons of steel per year, is getting all of that iron ore plus some from Indian iron ore mines. And I think this is one step of many toward that vision, and that's the vision that should be there.
My point being, it's probably a long drawn process that you're talking about. Are you happy with the start that's happened? And are you happy with what this move does for companies at large, such as yourself?
You've got to start somewhere, and I think this is the right start. I look at this as a 10 to 15 year picture. I think in my own eyes, India's GDP over the next 10 to 15 years should double. It should double and provide the jobs for the hundreds of millions of Indians that are going to be coming into the workforce over the next 10 to 15 years. Based upon the economic history all over the world, whether it's in the West, whether it's in China, any other country in the world, at this phase of economic development, as GDP doubles, I would expect that metals consumption, metals demand in India will as much as quadruple over that same 10 to 15 year period. And India does not have the current capacity to meet that type of demand. So India will be buying that metal from Australia, from Africa, from everyone else, helping those economies, not giving the true potential, the true benefit to the Indian economy where it should be. So we need to get started. We need to start the process of allocation of auctions. We need to get clarity on tenure so investments can be made, capital can be attracted. We then need to be seeing the exploration happen. We need to see clarity of the planning processes, the absolute assurance that only best practices, whether it's mine technology, CSR, sustainable development, are allowed. and permitted within the country, and then let the industry blossom. The industry should provide the metal for the future make in India. And I've used the term with our people, let's find some of the metal and find in India so we can be seeing the Prime Minister's vision for make in India. Now, I'd like to talk a bit about exploration because the one point about the auctions, which I think is quite attractive and I think is enabler, is that it clears up the uncertainty created through the log jams of the allocations. The one area of the auctions hasn't yet clarified, and I think there still needs some more work and some more discussion, and we've been involved with that discussion, would be how does an auction-based approach incentivize the necessary high-risk exploration that is required to find the next generation of mineral resources, which will be required as the metal demand in India quadruples. And for me, this is very similar to R&D in pharmaceuticals and IT. You're taking 1 in 100 or 1 in 1,000 type bets that you will be successful. If you are successful, you do really well, you make a lot of money, but then the other 99 or 999, they're unsuccessful and they're out of luck. So you have to have proper incentives to induce that type of economic risk-taking. And in many ways, I've got a background in exploration, so I've been, all my career from the age of 17, I've been involved with exploration in Alaska for gold of all things. But you know, I'd say that exploration is like looking for that proverbial needle in the haystack. However, you don't even know if that haystack has a needle or not. And so from a policy perspective, how do you create an auction around that haystack? Who's going to bid? If you're going to bid for that haystack and then you've got to find that needle, who's going to pay for it? And if you don't even know if the needle is going to be in there in the first place, you may not have any people attracted to the auction. So a pure auction process works very well when there's perfect information about the resource. An auction works more or less okay if there's imperfect information. There's some people may have different ideas and they'll bet based upon that different idea in the auction process. But if you have zero information, if you have geologic ideas that this is the part of the geologic terrain that could have an ore deposit, and you want our geologists to start looking in those areas and start using modern technologies, but you need to have access to tenure to start, how do you create an auction process that's successful in that type of environment? So that's a question. I still have a challenge. I'm involved in that discussion. I'm certainly looking forward. I have been in meetings with stakeholders on this, and I look forward to continuing that debate.
Okay, now, well, we do hope, we do wish you all the best in that debate as well. Hope solutions come sooner rather than later. Now, Tom, I want to focus a bit on the company as well. Sesa Sterlite, firstly, the decline in oil, iron ore, aluminum prices, will there be significant pressure on Q3, Q4, possibly even calendar year 15 earnings for a company such as yours?
Well, I think that, again, our business has been very simply focused around two important facets in the model. The first is ensuring that our businesses are low cost, so that at any point in any cycle, the businesses are cash generative in that period of time. I think that's quite important, particularly in the oil business where we've seen massive declines in oil prices on a global basis. But again, we're involved with a business that is in the first quartile or better, so that you can throw virtually any oil price at our business and it can still make money. That's a huge advantage in the global oil space, and that's the type of business that Sesa Sterlite focuses on, and we should be focusing on it for our investors. I think the second piece of our model is diversification. So that while you see some metals like oil and iron ore, of course, we don't have a lot of iron ore being produced now, but iron ore is also weak. We've also seen stronger prices for aluminum, and we've also seen very strong prices for zinc. So we have some balancing in our overall portfolio, and that allows us to continue to focus on the business, focus on the profits of the business, and again, focusing on the commitment that we have to our dividend to our shareholders.
Tom, I want you to don your economist hat once again and talk about the overall sentiment, which is, sort of hit in the metal sector because of the slow growth in China and other parts of the world as well. Do you per se see this as a huge commodity slump cycle, or would you say recovery for the metals and steel sector is around the corner?
Yeah, I think this is many ways, from an economic perspective, it's basically a market reaction to the strong 10 years of market sentiment we had, where you had a lot of growth, primarily in China, driving a lot of investment in new mines. And now the growth is slowing down in China, as it had been expected to do, but those new mines are just beginning to come on stream. So you have a bit of more supply than you have demand. And by the way, the same thing is working in the oil space, because you have a slowdown in global oil demand. At the same time, these huge shale oil developments have been occurring in North America. So same principles apply in metals and oil and gas. But again, China's demand is not dropping. The growth rate is slowing. So again, the Chinese economy is so large. As long as it continues to grow, my own belief is that it will sop up this extra demand over the next year or two, and we'll be moving into conditions which may not be as exuberant as they might have been a couple years ago, but there's certainly going to be more balance between supply and demand. And again, that's what we're focusing on. As we look at new mines and planning them, for the next 5, 10, 15 years, we have to also look at these broader demographics, the broader picture, which is China and India and other emerging markets, 2.5 billion people in the world that do want to consume more metal. They do want refrigerators. They do want microwaves. They do want cell phones. Just in 2014, for example, for the first time in history, there are more cell phones out there than there are human beings. And that's just an example of the huge uplift in metals consumption that is still taking place. It's getting harder and harder to build new mines anywhere in the world, whether you're in India, you're Africa, Australia, North America, it doesn't matter. They're getting harder to develop. So being positioned with low-cost businesses, being a diversified producer, being seen to be using best practices in everything we do, whether it's technical or social, CSR, with our employees, puts us in a very strong position in what will, I think, continue to be a strong sector in the long term.
So Tom, call me a sucker for numbers, but I just want to, because of the reply that you've given, I just want to get a sense on maybe not the exact numbers, but just what will happen to earnings for companies such as yours for the next 2 or 3 quarters. I asked you this question before. You gave me a brief insight, but not an actual thing. Will there be pressure? I'm not asking you to give me a specific number, but will there be a pressure in the near term for earnings for companies such as yours?
Yeah, look, I think that for our business, I think it's important to recognize that we have low-cost operations. I've said we are diversified, and we have pieces of our business that we're still in the process of ramping up production. So I think to look at Sesa-Stirlite, look at Vedanta, not only need to look at those market conditions, but you also need to look at how successful we are we at ramping up our overall levels of production. That's why for us, we have to stick to our knitting, notwithstanding the market conditions. I think, just to give you one example, in aluminum, we have spent more than $8 billion to develop capacity for 2.3 million tons of aluminium smelting in eastern India, between Chhattisgarh and Orissa. We're currently producing about 850,000 tons per year capacity. So we're running a business that we've invested nearly $10 billion in at roughly a third or more of capacity. That's not a way to optimize our overall return. So what we've got to do is we've got to ramp up that aluminum metal. And again, our LME prices for aluminum, and certainly the physical premium for aluminum, is quite strong. And that will be an important driver for that future earnings flow, which is, again, I'm not in the business of giving external forecasts of our business. That's not what we do as a matter of corporate policy. But I just want to give you a sense that we're not only looking at the market price of the product, but we've got to look at our capability of keeping our costs low. And also, of course, we've got to look at our ability to ramp up that capacity we've already built.
Okay, Tom, we wish you luck both with the operations of the company as well as some policy measures that you're working on for India. Thanks so much for taking the time out, and have a great 2015.
Thank you. It's been a pleasure.
Yep, okay, it's been a pleasure as well, Tom. Thanks so much for joining in.